everyone, it's me, the Boss Hog. We're back after a month, so there's quite a lot to cover. However, in that month, we've done quite a lot of buying and selling, and this definitely isn't clickbait. Those companies on your screen, I have completely sold out of 3 of them and sold half of my position in another one. I'll do my best to explain why and what I've been buying with that money. So stick with me, and hopefully you won't think I'm too mad by the end of the video. Let's do it. Okay, so standard stuff, and we're going to start with any change since I did my last video. Now, it's been a month since we did this, so there's actually quite a lot to go through. I've, however, spent a little bit of time just organising this, so hopefully it's a little bit clearer and easier to read than it has been. And I've also sort of consolidated my buys and sells just to make them easier, because there's been quite a few transactions. So we'll start with deposits, where we're aiming to do 2,800 each month until the end of March. Managed to do 3,500 in January, so super pleased with that, to be honest. I don't expect to put any more into January, but I'm happy with what we've deposited so far. It will mean that either in February or March I can deposit slightly less and still hit our 40k into our ISAs for the year, which is our very important target. So really pleased with that. In terms of dividends, actually quite a few, and it's quite nice now that some of my ETFs and investment trusts are starting to deliver real dividends. So the big one here, this is my first sort of ETF or investment trust that has actually contributed £100 in a single dividend, so that felt pretty good. I describe this as my UK focused value fund. However, I still like it. It's still sort of 5% under its NAV. Not a huge saving, but again, I'm happy to be buying into this and make it sort of a mid-sized position. So just over £100 into the dividends here, and felt obviously pretty good about that. Medical Properties Trust, we are still enjoying the dividends, even though we're down pretty horrifically on this at the moment. We are still holding. I am still wavering about whether to hold, but for now we remain in MPW. Huntsman, we're going to get to a bit more because it's actually, as you probably saw from my thumbnail, something I've since sold out of. But we did get a dividend from them at the end of last quarter, so that's great. Similar with Amcor as well. I decided actually not to invest back into Amcor with this dividend, mainly because I think it's fully, if not overpriced at the moment. I have difficulty in general really getting behind the price of most of the semiconductors, including Amcor, even though it's one of my largest positions. So I decided not to reinvest this. T Rowe price, however, I have no problem reinvesting it. I'm down still on this combination of share price and foreign exchange. So this just went straight back in. It was also very nice for me as well just to get these paid so quickly at the end of last year, especially because the 29th was on a Friday. So I wasn't actually sure these were going to clear into December numbers, but they did, and that felt pretty good. Then we have here our one of our newer positions. So I've been opening up a few positions, as we'll get to shortly. And this really is a reflection of my change of focus this year, which is to start looking at emerging markets, small caps, that kind of stuff. And this fund basically does both of those things. So an incredibly diverse fund, by the way, with exposure to sort of Taiwan, India, South Korea, South Africa even. So pretty interesting fund that I stumbled across, and I'm quite pleased with it. I managed to open a position very shortly before ex-dividend. That was purely accidental, so it was quite a surprise when I got the dividend sort of a month later. It was also very nice to get a Disney dividend, so I just needed about 100 more of these, and then I shall break even. So that felt fine. Yeah, it is what it is. We will see how Disney reinvents itself. I do think Disney is quite philosophically lost at the moment, creatively bankrupt, and needs to kind of rediscover its magic. Again, I do think that Disney has all the right tools to rediscover its magic, so we are holding it. Not down too much, actually. I wasn't buying anywhere close to the peak, but saying that I am still down about 20%, so it would be nice if this can recover. Then a couple of very small dividends toward the end of last year there, just sneaking in, so for my digital security and my Dutch-focused ETF as well. In terms of sales, though, this is where it gets kind of interesting. So I decided to sell about 60% of my ETF position in real estate. And that was partly as a reflection to some of the numbers that have been coming out from everywhere that make me think that interest rates, especially sort of outside of America, are going to stay a bit higher for longer. And so I decided to take a modest or reasonable amount of profit here and sell part of it. It's still a fairly large holding just because it had grown to such a big one, and made some quite good profit off of this as well. But yeah, I decided to sort of redeploy it elsewhere. Still like the position. I still especially like Prologis, which is the largest holding in this ETF. So I am quite willing to buy back into it, but I got a pretty decent a sell price of just under $40. And by the way, just as we touch on the sell and the buys here, it's worth saying that this average figure that we're looking at here, this is my pound equivalent. So you sort of have to mentally convert it to USDs. This is always the case, but it's just normally these numbers aren't quite so big. So just to make that super clear. But yeah, this is the transaction amount in total. This is the shares that I sold, and then this is my average share price, but in pounds rather than dollars, even though obviously the share is in dollars. I also decided to exit from Huntsman. Huntsman I've actually been in like 3 or 4 times before. It's still one of my best performing shares, even though I sold this latest batch at a loss. And really for me, I just feel like Huntsman has lost a bit of its scale when it got rid of one of its divisions. And I keep going on like earnings calls, and it sounds very like whiny about sort of pretty much everything, input costs, political concerns, especially in Europe, and then it's in China, and it's just like I just don't really like what I'm hearing. It doesn't sound like a business who are optimistic that they're in control of their own destiny, and it sort of traded sideways for a little while. And whereas when I first got into this, I was really excited to be buying it, $24, and then it sort of rocketed up all the way to 42, I think it was. Now it's sort of just drifting around there, and it does seem a bit directionless. So I may well regret selling this, but actually I don't really think I will. I'm also buying other shares that have industrial exposure as well. So I think I've just fallen out of love with Huntsman, to be honest, and decided to sell what's actually quite a large amount there, just over 4K. Next up, we've got Google. Now, in fairness, since I sold it, it has gone up about $6 a share. So obviously this would have been worth about £200 to me or so, or maybe more like 150 if I hadn't have sold it. However, I've also been buying Allianz Technology Trust and been doing pretty well on that, honestly. It's gone up sort of a similar amount. So broadly speaking, I'm okay with this move. Google was actually my hardest one to sell, just because it's I'm not sure. I think it potentially will recover quite well. I think it still has some upside, but yeah, I just decided that it was such an obvious win to move stuff into both Allianz and Frogmorton that we'll get to in a second. So it's kind of redeploying. Salesforce as well. This is a bit of profit taking. Salesforce is obviously doing quite well at the moment. I think they've kind of hit their stride. I actually have kept 10 shares in this, and I'll keep them for a bit longer yet. And it's also ran up pretty well. Again, the buys I've been doing sort of went up a similar amount, so it's pretty much of a wash if I'd have either bought or sold. But again, I just felt like it was a good opportunity to take some profits. I think Salesforce is quite expensive, although again, I think it's built a really good little ecosystem, and I'm a big fan of it personally at work as well as an investment. But again, decided to trim my position here fairly substantially as well. Next up, we've got our what I would class as my big pharma ETF. And again, I was just happy to sell at this price. It's gone up a few percent, but similar to before, I've been buying stuff which has gone up 5 or 6%. So actually, this was a pretty good sell, at least for now, in terms of the arbitrage there. I've kept one share, and I tend to just buy this as and when there's nothing else to buy. So I'm sure I'll get back into it. I do think over time it's important that I have a big pharma exposure. And yeah, we'll get back into it as well. Amazon was an interesting one here. So I didn't have as much difficulty selling this as I did with Google. First of all, because it has become a relatively small part of my portfolio, something like 0.5% when I sold it. And also, to be fair, again, I was quite happy wrapping this up into other things. Some of my larger positions, like Scottish Mortgage Investment Trust, have fairly large positions in Amazon anyway. So I just felt absolutely fine simplifying my portfolio in a way and selling what had effectively become a relatively small part of my portfolio. I think, again, Amazon is a perfectly good company that will continue to go places, but I decided to, simplify my portfolio as much as anything else. Next up, as part of my sort of general reorganization, I took some profit both on my automation and robotics and actually world consumer staples. So I'll start with that one first of all, which is one of my least favorite positions to buy, honestly, but I just sort of think it's a good thing to, again, have exposure to over the long run. I tend to just buy it whenever it's in the red and I can average down. There are a few shares in it, to be honest, a few positions that I really like. Probably Costco would be the main one that I absolutely love. But it's difficult for me to get excited about this because I do consider it just very expensive. I don't really rate consumer staples or consumer defenses as particularly attractive. For my investment style and risk and time horizon, etc. I think there are maybe I'd include Pepsi in that as well, and one or two others. But broadly speaking, the likes of Unilever just are an absolute snooze to me. That I don't like a lot of what's going on there, basically. So, however, we did make a small profit on this, and we still have a small holding in it that we will gradually again build up over time. Similar, I guess, with automation and robotics here. This was kind of more similar to Google in that I took some money. It had run up quite nicely and just put it into Allianz, just because I think Allianz Technology Trust specifically, just because I think it's almost a no-brainer buy at the moment. It's got like some of the best tech companies in the world, and it trades at a 10% discount. If I was to buy all those things separately, no idea why. I just will continue to buy and average up quite aggressively into that. Next up, we've got India here. Now, I still like an exposure to India, even though I'm starting to get it in other positions as well. However, this was more of an account move. So again, I decided to sell this in my wife's ISA and put it into my own. Basically, do a buy. I can't transfer it in that way. But instead, again, I just wanted to throw as much money as I could at Allianz Technology, and this was part of that as well. So it just all went into there. Similar with semiconductors as well. This has actually gone up quite a lot since I sold it, sort of 8 to 10%. So it would have been better keeping this in there. It wouldn't have made a huge difference, but a few tens of pounds. Again, as I sort of touched on really with Amcor, I just find the whole sector exciting. I do think it's the future, and maybe I'm being not bold enough thinking about the markets for sort of AI and chips more generally. So again, we remain a holder of this fund, and we'll continue to get back into it and just average into it. And then if there's any opportunity where the market crashes, we'll make a big move into some of these things. But for now, I thought like when I was selling it, it was absolutely fine to do so. And here, this is actually a mistake. This last one here, I actually meant to buy, and instead I pressed the sell button, so that was a bit silly. So that's the only reason why this is here, and that's I've done that once or twice before, and obviously I shouldn't try and multitask because apparently I'm not very good at it. So that's all my sells now, and then buys. So we're going to start with Allianz. Again, this is now my second largest position. To me, it's again a very brainless, easy buy, and so I'm very happy to be buying. I've averaged up really aggressively on this, and I was discussing it with the people in Discord, wondering if they should average up on positions where they're plus 50, 60%. I first got into this at 203, which honestly would have been a fantastic time if I'd have just chucked more money into it. But since then, I've just been averaging up super aggressively, and I think it's really interesting. Like if I'd have just sat on my original investment, I'd be up sort of 50% at the moment, and I'd have a profit of about £1,400. But instead, my average is now quite a lot higher. But my profit's also a lot higher, even though my profit margin has been reduced. But again, that's kind of a vanity thing, and I think especially for me, where I've still got 2 decades worth of serious financial contributions, I'm super happy buying this now. And continue to buy. So even though my average here is 301, since then, the share price is already at like 315, and it just keeps going up along with the rest of the tech. So again, I will continue to buy this, even though I continue to buy a share which is back up to plus 24% profit, just because I believe in it, and I still maintain it's fundamentally undervalued, and I have no idea why. So we'll keep up with that. I've also put a bit more money here into BlackRock. So this is kind of, I consider this as a pair with the Fidelity Special Values, except from where Fidelity Special Values is sort of my UK focused values, this is my UK focused quality. So it's got companies like Games Workshop, Informa, Gamma, the kind of companies that are sort of in the small to medium size that are, in my opinion, top quality companies. I'm up very fractionally on this at the moment, but again, not by a ton. Didn't get the best buy price here, if I'm honest. I was a bit annoyed because at one stage when I put through a fairly chunky order, it was like several percent above the ticks on the screen. So I started to do limit buys after that. I do appreciate that these can sort of have spreads on them, but this I wasn't used to seeing that, and it was a bit strange. Anyway. Still like this, still like all the holdings in there. I do also get a modest discount to NAV here as well, so that just feels very cool. Next up, we touched on this when we did our dividends, so I've now taken the 50 original shares I had and put it up to 103. Again, this is going to become a big focus for my buys over the next year or so, so watch this space. Similar to Fidelity as well, again here you can see it's a lot bigger than my sells, so we've now got a fairly large position in Fidelity Special Values, really good. Emerging markets, similar. It aligns with my expectations for growth and my targets for this year, so great. You can see here as well the automation and robotics I was back in to a fair degree as part of this as well. India, we've already spoken about, sort of moved ETFs there. Sorry, moved ISAs there as part of that. I also bought some stuff in SMT. This was really a fairly modest buy. I did average up here, and again, since then it's actually gone to like 750. My buy price is 698 at the moment, so we're still very comfortably green. Similar in a way to Allianz, Technology Trust. I'm more than happy to average up into this. This still enjoys a fairly significant discount to NAV. Likewise, and really it was a result of sort of selling Amazon and sort of thinking to myself, oh, I should probably put something into a position that has a fair chunk of Amazon in, which includes Scottish Mortgage. So pretty much because of my position size in Scottish Mortgage, I basically have more than £1,000 worth of Amazon anyway. So I was again, that was kind of my thinking, but this obviously isn't the same buy. It was more of a gesture to myself. So yeah, that was the rationale there. I continue to buy mining. This has actually got really beaten up over the last week, specifically on pretty rubbish economic data from China. I still think long term it makes a ton of sense to be buying mining, so that's exactly what we're doing, and I will continue to do so. Again, another focus for me next year, just because I think it's important to have that in my portfolio. Huntsman here is a buy. This, though, is the reinvestment of my dividends, so used as a chance to average down. T-Row we've touched on. Again, we were buying semiconductors as well until this week, where I used the opportunity to take out some money and put it into Allianz. This one here is pretty interesting, actually. It is worth addressing. So my small cap, I sold quite a lot of this when it was at like $88 and pretty much timed it perfectly. Since then, it's come down to sort of 82. 83. So we are back into buying mode on this, sort of enjoying our modest £300 profit or so on the sell that we previously did. And now, of course, I'm very happy buying on this because it seems like an instant, I don't know, 6% win or something like that on everything I rebuy. I'm basically getting a discount on what I sold it for. But this is good. Again, it aligns with my small caps focus. Obviously, here this is a developed world, specifically US. But I still like that. There's some good data that I've seen that suggests that this outperforms over the long term. And again, we're in this for the long term. I find small caps and mid caps more interesting than the big caps, to be honest. And so yeah, very happy to be back to buying this again and rebuilding our position in this, even though I sold out a fair chunk in December. Then we've been buying our infrastructure as well. This one is maybe a little bit contrarian and might be worth explaining my rationale here. So there's two main reasons why I'm buying this. First of all, because it was obvious to me, actually following a consult with ChatGPT about a year ago, that I had a gap in my portfolio in infrastructure. So that was part of the rationale. But actually, I think at the moment, like with economies sort of being a bit sluggish, I'm kind of betting on infrastructure investment over the next several years. So this is kind of a long-term macroeconomic play. I think there's going to be a lot of changes to workplaces, etc., and the expectation of people on what they expect the state to do, and then what the state sort of requires people to do. And I sort of think that the state is almost going to be forced to find somewhere to spend money and for something for people to do, and therefore infrastructure should benefit. There's also sort of rapid industrialization across significant parts of the world, and I expect that to continue as well. So it's kind of a big play on very large macroeconomic movements, for want of a better word. The Netherlands there, and indeed Canada. These are regional bets, basically. I think those regions will outperform over the long run. Walt Disney is our dividend reinvested. And then this one's also kind of interesting. So this is a new position also. This is sort of global quality dividend growth. So a very broad based as well, and similar as well in terms of its depth, extremely broad. This is kind of a bit of I wanted a new position, and the main reason for this is, as we'll sort of get to very recently, I've been building my cash, and as a result of interest on my cash, I've been getting a few pounds each week. So that's what I've decided to put it. So any interest I receive from within my ISAs, and also I've decided that where I've been making changes to bank accounts, etc., I should start to receive dividends each month at the end of January. So I'm going to sort of keep an eye on how much interest I'm actually receiving from my cash storage. And I'm just going to put everything into this position. And over time, it will be really rewarding for me personally to see how this money that I'll almost certainly have forgotten about otherwise, because it's just a few pence and a few pounds here and there. And over time, this position has the potential to go into hundreds and eventually thousands, just as interest rates and my return on cash sort of does its thing. So that will be quite rewarding for me as I sort of build cash piles, mostly for an emergency fund. Although the stuff that remains in my ISA is really intended to be unwound over time. So that's kind of fun. We'll see how that shakes out and see if I'm able to use those cash reserves to boost my performance. Anyway, I appreciate that was a super long introduction. Let's now have a look in terms of my performance over the last month as well. Okay, so we're going to start with our normal location. I've highlighted this screen just because this was the numbers from the last video, so you can see again it's been a little while. Honestly, I've just been super busy, first with Christmas, then some illnesses, and actually fundamentally with work, where I've had a few system challenges over the last month, so that's been taking up a lot of my mental energy. Outside of that, I've also highlighted these red just because I have a little niggle at the moment with some of my logic that underpins this, specifically with the cash deposit that sort of isn't fully incorporated into all of my numbers yet. This is just my unrealized profit and loss, but because of the fact that that is based on stocks and I've now got cash, it's showing up as a minus because it looks like I've basically got an additional 7K's worth of loss almost. So that's the reason for those numbers there. And again, that started from when I started to do the cash from the 5th of January, or that week specifically. So we'll fix that shortly. Outside of that, however, our overall portfolio is more or less unchanged. So then that's a combination of, we're not quite as profitable as we were a few weeks ago. That was sort of my all-time high profit. We have been rebuilding over January. And especially the first week in January got really slammed. Everything just went down. My largest positions were all getting beaten up. Foreign exchange was also pretty unhelpful. Since then, it's been gradually rebuilding, but I'm still underperforming the markets in January to date. I did have an exceptional November and December, so there was an element of pullback. And again, hopefully, I will see how it does. We'll touch on that more very shortly. So we did have our 3.5K deposit here. You can see it there between those weeks, so that's as expected. And then we've got here our profit and loss, but again, there's some issues here with my unrealized that we'll fix. Dividends have also been growing, so we're now at over 8K in dividends since we started, so that feels really good. I very much expect to hit 10K this year, so we'll have a very muted celebration when we get there, but no doubt that will be a thumbnail in the future. And yeah, great to see our profit above 20K again, so that feels pretty good. If I then zoom up to the top, there's actually quite a few little changes here that are maybe worth some time to talk about. First of all, in terms of the graph, I've updated the CPI figures now that they've been published. And I didn't realize this at the time, but the ONS basically do a slight updates to a rolling 12 months in the data table that I'm using for this. So Office of National Statistics there. So I also just tweet 1 or 2 months as they've made those very small changes. So you can see here that CPI inflation is the third best performing, which is kind of bad because obviously here we really want our blue line to be above orange, which it is. But it's incredible just what inflation has been like in the UK over the last sort of 3 years since this started. So compounding at 22% there on a time-weighted basis is pretty mental. You can also see that my month to date has been pretty tough. Really, the FTSE 350 is kind of in the same ballpark. And then the All World and the S&P are outperforming me January to date. But I have been pretty volatile. You can see my blue line here going all over the place. So not feeling too bad about this really. And honestly, yeah, I've used it as an opportunity to do some buying. So outside of that then, so I've updated my target and deposited here. So we've just got another 5K to hit our year-end target. Year-end in the UK for the tax year is, I think, 5th of April. But for my head mentally, it's the end of March, just because that'll be the last time me and my wife get paid. But very much expect to hit that, so that'll be good. And then we've got my cash balance here. So this is my cash across both ISAs, so 6888, and then my interest earned to date as well. So slightly higher actually than my position that I've opened to cover it, but again that will catch up as and when I add to that position. And then I also thought this was kind of interesting as well. So I don't have a target or anything like this, but again, since early January, Trading 212 now pay 5% on cash, and they pay it daily, so that's pretty cool to see that. Obviously, that's still going to underperform the stock market in the long term. And what I've done at the moment is my cash in both of my ISAs, I'm just spending £100 a day, basically doing a very granular type of dollar cost averaging or pound cost averaging. So yeah, every day I sort of buy £100 worth of stocks and just gradually drift it down. And obviously, if there's an opportunity that arises for me to buy, more, then I will. But I don't have a target here. There is no plan to have this at 4% or 5% or whatever. I'm not overly pessimistic either about the market, but I'm also not overly optimistic. I'm not a fortune teller. And I think this year has the potential to actually really build on last year and be quite exceptional, or be quite terrible as people start, to worry about everything. So we're just going to trust the averaging process and not think too deeply about it or worry about it. The cache also required a rethink in terms of how I presented this. So again, I think here what I need to do is also add my cache amounts to my unrealized. But again, we'll play around with that very shortly and get these figures back up to date. But otherwise, I've added this figure in here, and a similar thing happened also with my portfolio value. Like, this dip is a little bit artificial because it wasn't counting the cash in my day end figures. I since fixed that, but only today. And again, we'll fix the rest very shortly. So that's I guess the problem when you're building your own portfolio, you stumble across these things that you haven't previously thought about. Because I never kept cash, it was always just as soon as it went into my ISAs, I would be spending it. Whereas now we are spending. My other graphs here, again, I got really beaten up at the start of January here. A very sharp pullback, but since then it seems to stabilize, and one or two things have actually been doing pretty well. And again, just to be super clear, we remain very green or blue, as it were. This is my capital growth and then my dividends. So anything above this green line for our capital contribution means that overall we are in profit of 20 grand, which is great. In terms of significant movement, I mean, actually this minus 2.5% here, I mean, it has had a pullback SMT, but that's fine. Honestly, I wouldn't mind this pulling back. The lower into the sevens, the better. This is in my personal ISA, so I can't add any more big capital to it until April, when the allowance is reset. Yeah, Allianz here, Technology Trust, doing really well. I guess a very small pullback must have happened at the end of Friday, but again, 312 is really good. We're very green on this position. It's worth just talking about Gamma very quickly, because this remains a pretty under the radar and unloved stock in my opinion. It did a trading update that was very reassuring. Its cash conversion is really solid. Its recurring revenues and sort of software as a service, if you can call it that, is very impressive, basically industry leading as far as I'm concerned. And you now get about 10% of its market cap in cash. I am kind of hoping that they're going to continue with their acquisitions. They actually bought a cybersecurity company last year, so definitely starting to branch out more into the sort of IT hosting support and yeah, more generalist IT. And what's been happening with telco over many years is sort of a gradual drift towards a more IT based business, both within Gamma and more broadly. By the way, I am aware that one of my subscribers, or a couple of my subscribers over time, have asked for a video focused on telecoms. I have started work on that, but I haven't yet been able to do it. But again, I'm hoping to explain why mostly I don't invest in telecoms. However, Gamma sort of ticks a lot of the boxes for the rare cases where I would. And honestly, if I could be buying more individual shares at the moment, I would absolutely be putting more money into Gamma. I think it's an excellent, high-quality company that deserves a much higher multiple than what it's currently got. So it was good to see the market give it at least a little bit of love on the very positively reassuring. We'll also have a deep dive into their numbers when they're published in full in mid-March, so something to look forward to. Amcor is back being very green, and again, we're happy with this, but again, I think it's a difficult price to justify at this moment in time. Genius has also had a pretty good week. I cannot for the life of me find any specific news. However, there is a lot of news, about companies, like even one or two UK companies starting to list in the US that have exposure to this market. So gambling liberalization in general. And again, I really like Genius, even though I now accept I overpaid for it. It's a very solid mix of sort of tech and commercials and gambling and data and etc. So we're pretty big on that more generally. Outside of that, the only other thing to talk about is Hollywood Bowl. It has definitely had a run up as a combination of pretty decent results, as well as a competitor getting taken out with a very large premium. There's a lot of rumor at the moment in the UK stock market about whether it's undervalued. Honestly, I think it is. That's kind of part of the reason why I'm buying a lot of Frogmorton here and also Fidelity. Again, I'm actually quite bullish. I just think they're very clearly undervalued. And worst case scenario, I guess, is that private equity comes in and I exit these positions, and that's perfectly fine as well. I'll find a place to put it. If not, then the likes of well, Phoenix included, but Hollywood Bowl in this instance, this is a very cash-rich, growing company that will continue to pay me good dividends. And actually, in February, I'm getting 3 figures of dividends split between a regular and a special from Hollywood Bowl. And again, I think honestly at this price, I need to kind of come up with a new price, but I expect to average up with that dividend into Hollywood Bowl. I don't think this is expensive, and it's certainly not fair value in my opinion at the moment. But again, I've not run the numbers since I last did this a year ago, so it need to be done before I truly reinvest my dividends. But I think it's a pretty clear way to go. And then everything else here, we just continue to buy more of our ETFs, so not a ton more to add outside of that. ASML, I wish I could buy more ASML, honestly, but again, it's now the largest holding of Scottish Mortgage, so I've got sort of a good £2,000 worth of ASML within this figure here for SMT. So that doesn't feel too bad. But again, I'm really like ASML. I think it's an incredibly great company to own, even though it's very expensive. I think that justifies that premium. And then the only other thing to point out here is MPW just continues to be my worst performing stock. I'm down like 4,000 on this, so it's my second worst performing stock ever after Polymetal, which was a Russian focused miner that got absolutely destroyed and then ultimately delisted London into Kazakhstan. So MPW is not so far behind that now. I guess the one redeeming thing is MPW can never become worse than Polymetal, because I lost like 5.5k on Poly, and I've never had 5.5k in MPW to lose. So that's a silver lining, I suppose. Then it may well be. But outside of that, everything is going pretty well, and you can see here as well. Like now, I've got my cash and my total invested in stock. So this 172 here is where we're currently up to. So, and also a milestone kind of happened just in terms of wrapping this up. In that, in my ISAs, I now have more than half of my ISAs into ETFs. I never thought this would be me, and then my wife got her private equity job, and now we can't buy individual shares outside of dividend reinvestment. So it is what it is. This is sort of a year and a half's worth of averaging in and only being able to buy ETFs. So we've gone from sort of effectively no ETFs, I guess some in SMT, to this. Yeah, it'll be interesting to see how I perform with the ETFs over time. I am trying to sort of eke out edges and frankly invest in a way which is kind of exciting for me by investing in sort of a broad range of ETFs and investment trusts. Hopefully we will find some good positions, but we will definitely see over time, of course. But yeah, that's an interesting development in the general direction there. So outside of that, I mean, I think I've said pretty much everything. All the data is starting to come in. Very pleased actually with my my dividends year to date, just because this is my best January ever. There we go, just see the graph there. And again, I don't quite expect February to be as good as last year. Last year I had a couple of specials, including one from Hollywood Bowl again, but it should be still pretty solid. So not too long until we break that 10k figure. Honestly though, I think I said most of what I wanted to say with all of my buys and sells this month. Yeah, quite a lot covered there. I appreciate the selling out of tech may well raise some eyebrows. On the whole, I was happy to do so. And again, I think I've redeployed it into positions that I think will do very well. Typically, even the places I put them into are already giving me a discount, so it feels great buying on that basis. And if I'm honest, it never feels terrible taking money off the table. And again, although you can have regret at selling at sort of arbitrary figures, for me, I think because of the fact I've recycled it into sort of similar-ish, that I would expect my other investments to sort of rise if they rise, and if not, then it's kind of much of a muchness as well. So I've sort of taken some of the risk and broadened out the positions there, and again exited Huntsman just because I've lost confidence in the business. So you'll see them right down at the bottom here in terms of my now zero. I'll take this off next week, as is my usual tradition, but down 24% in the year and just not really doing anything. So happy to get out of that. So for now though, I think that's everything. If there's any questions or you think I'm crazy, feel free to leave me a comment. Otherwise, thank you very much for watching. We'll try and make these a bit more regular so we don't have to spend 20 minutes talking about my buys and sells. However, I know there are some masochists out there who are into it, so hopefully you guys at least got some enjoyment out of it. Otherwise though, I've been the Boss Hog. Thanks very much for watching, everyone, and good luck with your investing. Bye for now.